What self-employment tax rules affect freelancers? Imagine earning money from your skills and wondering how much of it actually goes to taxes. If you're freelancing or working in the gig economy, understanding self-employment tax rules is key to keeping more of your income. Let's break down what you need to know so you can stay ahead and avoid surprises when tax season rolls around. First, if you make $400 or more in a year from freelance work, you are responsible for paying self-employment tax. This tax helps fund Social Security and Medicare, which are programs that support you when you retire or need health care. Since you are both the worker and the boss, you pay the full amount yourself, unlike traditional employees where the employer shares the cost. The current self-employment tax rate is 15.3%. That includes 12.4% for Social Security and 2.9% for Medicare. There is a limit on how much of your earnings are taxed for Social Security, but Medicare tax applies to all your net earnings, no matter how high they are. Remember, this tax is separate from your income tax, so you need to plan for both. When you report your income, you use Schedule C to list your business earnings and expenses. This attaches to your personal tax form, called Form 1004. You also fill out Schedule Self-Employment to calculate your self-employment tax. If a client pays you $600 or more, they should send you a Form 1989, but even if they don't, you must report all your income. Instead of having taxes withheld from each paycheck, as employees do, freelancers pay taxes quarterly. That means 4 times a year, usually in April, June, September, and January. Missing these deadlines can lead to penalties, so it's smart to pay at least 90% of your current year's taxes or 100% of last year's. If your income is high, you might need to pay 110% to stay safe. A big benefit of freelancing is being able to deduct business expenses. You can write off costs like office supplies, equipment, travel, meals with clients, and even part of your home if you work from a dedicated space. Keeping receipts and tracking expenses all year makes this easier. If you work from home, you may qualify for a home office deduction, which allows you to deduct a percentage of your rent, utilities, and other costs based on your workspace size. To stay organized, set aside about 25 to 30% of each payment you receive to cover taxes. Using accounting software or spreadsheets helps track your income and expenses. As your business grows, working with a tax professional can make managing your taxes smoother and help you find more deductions. Tax laws can change, and new rules might be introduced that affect freelancers. For example, some proposals suggest making tips and overtime pay tax-free for certain workers or changing how Social Security and Medicare taxes are calculated. Staying informed about these changes helps you plan better. Getting a handle on self-employment tax rules helps you run your freelance business smarter. By tracking every dollar earned and spent, making timely quarterly payments, and claiming all eligible deductions, you can keep more of your money and build a successful career outside traditional work paths. Remember, understanding taxes is part of the job, and being prepared now pays off in the long run.